8 things you may not know about the USDA home loan that are really pretty cool. USDA loans are low interest home loans with zero down payments designed for low and moderate income Americans who don't qualify for traditional mortgages. You must use a USDA loan to buy a home in a designated area that covers a lot of rural and suburban locations. Hello, this is Selland from Signet Mortgage, and in this message, I'm going to cover the 8 things you didn't know about a USDA home loan. Number 1, USDA mortgages require no down payment. When you buy a house and use a USDA mortgage to finance it, you can literally close with no cash whatsoever. Even your closing costs can be included. Second is when you get a USDA loan, the U.S. Department of Agriculture guarantees to your lender that your payments will be made. This security allows lenders to provide very competitive interest rates. The third thing you may not know is that although the USDA home loan can be a no money down program, you can put money down to lower your monthly payment, but you don't have to come up with a down payment on your own. In fact, the down payment can come from a charitable organization, a parent, grandparent, or another family member. USDA are 15-year or 30-year fixed loans. There's no adjustable rate loans available to home buyers through the USDA program. The fifth thing you may not know is that USDA home loan allow borrowers to borrow 100% of the home's purchase price plus another $27,500 on top of that for repairs or home improvement. Allowable repairs include replacing a roof, remodeling for accessibility of handicapped people, and for making energy efficient improvements to a house. The sixth thing you need to know is should mortgage rates drop in the future, we kind of hope they do, homeowners with a USDA home loan can refinance quickly and easily through the USDA streamline process. To get approved, you only have to show that you paid your mortgage on time for the last 12 months and that the refinance will lower your payment by at least $50 per month. One more cool thing, USDA's official mortgage rulebook says that home buyers must have a credit score of 640 to get approved, but it'll approve home loans for buyers with credit scores below that on a case-by-case basis. Finally, USDA mortgages are assumable. That means they can be passed along to future buyers of your house with the same interest rate. Imagine 5 years from now selling your house with its current mortgage rate intact. Your home could be easier for all to afford because it already has a low mortgage rate. So if you're looking for a home in a more rural area and an area that maybe used to be rural, and you have and you meet the credit and income qualifications, you may benefit from a USDA home loan. Check with us to find out more details. Eligibility is based on the property, income, size of household, and other details. It's a bit of a challenge to navigate through the details, but that's what we are here for. Thanks for watching. If there's anything we can do to help you with your home financing goals, please don't hesitate to give us a call. This is Selland, and you can find out more about us at Signet Mortgage at www.signetmortgage.com, and my direct line or my email is clay@signetmortgage.com, and then phone number is 925-807-1503. Thanks so much. I look forward to helping in any way that I can.